how to buy your first stock in the stock market, okay? So the first thing you have to know is how to get that information. How do you get the info? There are many sites that you can get the information on a ticker symbol or a company. First of all, you can go on investing.com, you can go on Seeking Alpha, you can go on MarketBeat, Morningstar, or your brokerage account, okay? So what are the pros and cons, or just the pros of each site that I use? I personally use investing.com pretty much every day because that's where I get my macro, that's where I see my charts, and that's where I see my financial statements, my balance sheets, everything about a company, and they have a chart that is up to date. That means that they're not delayed and it's free, okay? This is important because a lot of charts are delayed by 15 minutes. If you're trying to trade markets with a delayed chart, it's not gonna work. You'll always be late. You'll be wondering why your amount has passed at a certain point. That's because you're on a delayed chart. And with investing.com, you're at the right moment right now trading these stocks, okay? The second one is Seeking Alpha. It's where people publish their opinion, their analysis on a stock. So this one's a little bit more advanced, where you get CFAs, Chartered Financial Analysis, where they give their opinion on a stock. So it's more advanced. It's when I want to see some information that's more in depth, I go on Seeking Alpha. MarketBeat. I love MarketBeat because I can see insider trading. I can see if the people from inside the companies, the directors are buying shares, or institutions are buying shares or selling shares from the market. Morningstar, I like to get my financials. I always find that I can get a longer time span and I can compare and see better on Morningstar for financials. Now your brokerage account, depending on which one you use, I use BMO line of action, so I can have pretty much all the information. It's a little bit more expensive at $9.95 per trade, but I'm not a day trader. So what I'm doing is when I'm buying a stock, I'm a buy and hold type of guy, or maybe I'm gonna hold it for 7 to 10 years, okay? So to get information, you need to know how to get that information on these sites, because if you don't know that Tesla has a ticker symbol TSLA, then it's going to be hard for you to find or know about these companies, because you won't know that each company has their own ticker symbol, okay? So just keep that in mind. Every company has a ticker symbol. Now, second thing you need to know, style for investing. Are you a growth or a value investor? And there's a big difference between both of them, because if you're a value investor, growth investing makes no sense. And if you're a growth investor, you're not going to like the value investing. Why? Because there's a lot of hype in growth stocks. Like when you see PEs of 100, or Tesla is a high growth stock, it's considered a technological company where there's a lot of hype. A lot of people believe that they're going to change the world, and they're already changing the world. Elon Musk is, in my opinion, a genius with SpaceX, with Hyperloop, with Tesla. So when you're looking at value investing, you're pretty much looking for a margin of security. You're looking for a company that gives dividends. You're looking at a company that gives between a price to earning ratio of 7 to 15. Also, you need to know if you're going to be trading, or you're going to be short term, long term, when your style for investing, okay? So third is the market cap. You need to know the market cap, because if you're investing in blue chips, dividend companies, these big companies that you see on Dow Jones, these are blue chip companies. They're safer, they're very installed companies that have a long track record. Well, versus if you're investing in small companies, they have a lot of potential for growth, but they're micro caps and there's a lot of chances that they'll file for bankruptcy. Now, 4, you can also go for passive investing, just investing in an ETF that tracks the overall market. This is simple. You can buy the S&P 500, you can buy the Dow Jones, you can buy bonds, you can buy pretty much everything and build your portfolio. If you don't want to study, you don't want to learn anything, this is the best method because you'll be tracking the markets without really any efforts. You can still do your job, you can still do your career and save and invest at the same time. Now, fifth, determine the cost of your money. This is really important because why would you be investing if you have debts that are costing you 10% a year? The market gives you around 7 to 9% a year, and if it costs you 10% to get a 7 to 9%, then this is pretty crazy because think about it. This is, if you were to pay your debt, would be a risk-free investment. While if you're going in the markets, you're taking risk to get a 7 to 9% return, okay? So always think about the cost of your money. Always try to see money as putting it where it's the most lucrative for the less risk you can make. If you can make 20%, focus on making 20%. If you can make 15%, focus on making 15%, okay? So let's go over this one more time. How to buy your first stock in the stock market. Get the information. Where do you get the information? You can get it on investing.com, Seeking Alpha, MarketBeat, Morningstar, or your brokerage account. Investing.com, I use it for the macro, I use it for the charts. They're on time, they're not delayed by 15 minutes. Seeking Alpha is for more advanced information. MarketBeat is for the insider information. Morningstar, your financial, and you could also get all that information on your brokerage account, depending on which kind, okay? If you pay more for your brokerage account, you're gonna have more information on your brokerage account. Now, Tesla, remember, there's a ticker symbol. TSLA is the ticker symbol for Tesla. Second, style for investing. What is your style of investor? Are you a growth versus value? The last 10 years, growth investors have outperformed value investors. Usually when growth investors outperform, there's a shift in paradigm and then it goes back to value investing to growth to value. So there might be a change in the next 10 years. That's what I'm seeing. I'm seeing that commodities right now are undervalued. Okay, commodity stocks like oil, gold, anything like that, I believe that they're undervalued. And when we're looking at the market cap, blue chips, okay, the third thing that you need to know when you're investing in stocks, you need to know, is this a big company or a small company? Big companies have less room to grow. Small companies have a lot of room to grow, but they can go bust faster. Passive investing is something that you can consider if you don't want to start learning about balance sheets or financial statements, cash flow statements. All of these, if you don't want to learn about them, I would consider that you start investing in ETFs. They trade on the overall market, but they track the market. 5, determine the cost of money. If it's costing you 10% to get into investing at a 7 to 9%, that doesn't make any sense. I would consider before even investing, paying off your debt, then going into the stock market, okay? So if you like this kind of information, you can subscribe, and I'll be seeing you on the next video.